All right, welcome everyone. We've got something really important to unpack today, something every UK taxpayer should know about. And we're lucky to have ProTax Accountant, the big UK accounting firm, on board with us for this. We're diving deep into HMRC Connect. You've probably heard the name floating around, but maybe not quite sure what it all means. So our goal here is pretty simple. We want to lay out the facts about HMRC Connect, this powerful system, right at the heart of how taxes work in the UK. We want you to really get what it is, how it works, and why it actually matters to you as a taxpayer.
Yeah, absolutely. Think of this as like your crash course on HMRC Connect, getting to grips with how it all works. It's not about getting bogged down in all the technical stuff. It's about understanding the key ways HMRC is making sure that tax collection is fair. We'll break down exactly what it is, how big it actually is, and what all that means for you, the taxpayer.
Okay, so let's just jump right in. What is HMRC Connect?
So HMRC Connect is basically this super sophisticated digital system. It was set up way back in 2010 by HM Revenue and Customs. And its main purpose is to sniff out any potential tax evasion, any errors in tax submissions, and basically make sure that everyone's paying the right amount of tax.
Yeah.
So you can kind of think of it like a really smart computer system that can spot unusual patterns. It does this by, comparing loads of different bits of information, and that's essentially what Connect does. And the ultimate aim of this, of course, is to shrink the UK's tax gap.
That tax gap, that's the difference between like what HMRC should be collecting versus what they're actually getting, right? And that's a pretty huge number, isn't it?
Oh, yeah, it's a significant amount. For the financial year, 2022-23, the tax gap was something like £35.8 billion. That's about 4.8% of the total tax revenue that they expected. And then, provisional figures for 2023-24 suggest that it might have crept up a little bit to £39.8 billion, so around 5%.
So where's all that missing money going? What's causing the biggest losses there?
Well, if we take a look at those figures from 2023, the biggest chunk, about £12.8 billion, is actually down to tax evasion. That's people deliberately trying to dodge paying what they owe. Then you got tax avoidance, which is more about, exploiting loopholes in the law. That accounts for another $6.2 billion. And then finally, you've got just plain old errors in tax returns, which is, not intentional, but still contributes a fair bit, about $3.9 billion to the gap.
Wow, so that's a lot of money across all those categories. How effective has Connect been in clawing some of that back?
Connect has actually been a pretty powerful tool for HMRC in tackling this. By 2023, it's estimated that Connect was helping to recover something like £11 billion in lost tax revenue each year. And early indications for 2024 suggest that this has probably gone up to $12 billion. And HMRC are really hoping to push that even higher in 2025, especially as they bring in more advanced technology.
It's interesting to think back. Wasn't that tax gap even bigger when Connect first came on the scene?
Yeah, you're absolutely right. Back in 2010, when they first launched Connect, the UK's tax gap was a whopping £42 billion. So, while the problem hasn't completely disappeared, Connect has definitely had a big impact in bringing those figures down.
Okay, so we've got a sense of what it is, why it's important, but how much data are we talking about here? How far does this thing actually reach?
The amount of data Connect processes, it's mind-boggling, really. By 2023, it was handling over 100 billion separate pieces of data every year. Estimates for 2024 suggest it's gone up to around 110 billion. And with things like Making Tax Digital rolling out, we could see that figure hit 120 billion in 2025. I mean, to give you some context, that's more data than Google searches in a whole year.
That's just incredible. How much did it actually cost to build and run a system that huge?
Well, the initial investment to develop Connect was around 45 million pounds. And then the yearly running costs have been hovering around 100 million pounds for both 2023 and 2024. And it's projected to go up a little bit to 105 million in 2025, probably because of those new technologies they're bringing in.
And I'm guessing this system is looking at all our tax returns, right?
Oh, absolutely. Connect is crunching data from something like 40 million individual tax returns and 5 million business tax returns every single year. But it doesn't stop there. It actually goes beyond just the information that you directly submit to HMRC.
You mean beyond our tax returns? Where else is it getting this information from?
Well, Connect is designed to tap into all sorts of different sources. So you've got things like the land registry, which keeps track of all property transactions. And increasingly, it's pulling in data from overseas bank accounts through these international agreements, like the Common Reporting Standard.
So it's getting a much bigger picture of someone's financial activity then. You mentioned an example earlier about a builder, right?
Yeah, that's a good example. So let's say you've got a builder in 2024, declares an income of £20,000, but then they go and buy a house for £500,000. Now, Connect's going to spot that massive gap between their reported income and their spending, and that's going to trigger some further investigation.
So it's basically building up a kind of financial footprint for every individual and business.
Exactly. Connect acts like this really advanced risk assessment tool. It pulls together data on your income, your spending, your assets to build up this comprehensive profile.
And then it uses that to check those tax returns that we've all filed.
That's right. By comparing what you've put on your tax return against that profile it's built up, Connect can pinpoint any inconsistencies, anything that just doesn't seem quite right, and that could point to things like underreported income or maybe expenses that have been inflated a bit.
So what happens if Connect finds something fishy? Does HMRC come knocking on your door straight away?
Well, it's not usually an immediate knock on the door, but if Connect finds a serious discrepancy, it can trigger a compliance check from HMRC. In 2023, Connect was responsible for over 85,000 of these checks, and that number rose to about 90,000 in 2024. And they're expecting those numbers to climb even higher in 2025, especially as they focus more on small businesses, because they're seen as contributing the biggest portion to that tax gap.
Can you give us a few more everyday examples of things that might raise a red flag for Connect?
Sure. So imagine you've got someone who's self-employed. They declare an income of £30,000, but then their online payment platform shows that they've actually received £80,000. That huge difference is definitely going to get noticed. Or let's say you've got a shop owner who's reporting really high costs for their supplies, but then their social media is full of pictures of them on these luxury holidays abroad. So these kinds of inconsistencies between what someone's saying their financial situation is and what their actual behavior suggests, that's the kind of thing that can lead to HMRC digging a little deeper.
Right. And you mentioned a case study earlier about a takeaway owner.
Yeah, that one's a good example of Connect in action. So in 2023, you had this takeaway owner in Manchester. He declared £50,000 in revenue and paid about £7,000 in tax. But when Connect took a look at his bank accounts, it found £200,000 in deposits and loads of card transactions, suggesting his sales were way higher than what he'd reported. So HMRC ended up hitting him with a tax bill for £150,000. That covered the unpaid tax, penalties, interest, the whole lot. And we saw even more cases like this cropping up in 2024. And as Connect keeps getting better, we're likely to see even more effective detection in 2025.
So Connect's clearly leading to some pretty big wins in terms of recovering unpaid tax. What kind of figures are we talking about here?
Oh, it's significant. In 2023, the revenue recovered through Connect's compliance activities came to a total of £36.9 billion. That's up from $34.1 billion the year before. And early estimates for 2024 put that figure at around $38 billion. Plus, HMRC is expecting even higher recovery rates in 2025 as they start using AI to make things even more efficient.
And it's not just about getting that money back. There are also legal consequences in some cases, aren't there?
Oh, absolutely. In 2023, Connect was involved in roughly 1,300 criminal prosecutions for really serious tax offenses, and that number went up to about 1,400 in 2024. And on top of that, you've got a lot of cases that are settled through civil settlements. There were around 11,000 of those in 2023 and 11,500 in 2024. And again, those numbers are likely to keep on climbing. And as we've already touched on, the main focus here continues to be on small businesses and people who are self-employed, because statistically, they're the ones who tend to make up the largest part of that tax gap.
So basically, what we're looking at with HMRC Connect is this incredibly powerful data analysis tool that's been running for, over a decade now. It's sifting through huge amounts of data from all these different sources, and it's all about finding those little mismatches in tax returns, making sure everyone is paying their fair share.
Yeah, that's a pretty good summary. It's all about creating a fairer and more accurate tax system for everyone in the UK.
And for those of you listening, for all the UK taxpayers out there, it's so important to realize that HMRC Connect is out there. It's doing its thing. It's got all these capabilities. And really, it highlights how important it is to make sure your own tax affairs are all above board, to be honest, and accurate.
Couldn't agree more. As technology gets more advanced, systems like Connect are just going to get better and better at spotting those discrepancies. So keeping good records, staying on top of your tax obligations, that's more important than ever in this digital age. The system is evolving all the time, so keeping up with your responsibilities is crucial.
Great point. So that wraps up our look at HMRC Connect. Stay tuned for more deep dives into the world of tax and finance coming soon.
Thanks for having me.
Thanks for listening.